Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance and explain it in ways that actually make sense. Today we're diving deep into a report from Fidelity SALEM Street Trust, and let me tell you there are some big numbers in here that you are definitely going to want to see. This is packed with info about several Fidelity funds and their performance, a treasure trove of financial details for your investments. We will be focusing on the important ones. Before we dive in, if you love getting easy to understand insights from mountains of corporate data, make sure you hit that subscribe button. And hey, if you want to chat more about these insights, join our growing community on Discord. The link is in the description below. Alright, let's decode this report starting with the Fidelity Small Cap Index Fund. Think of this as a snapshot of how this fund was doing back in October of 2025. What did this fund invest in? Well, it looks like industrials took the biggest slice at 18.1%, then came healthcare at 17%, and financials closed behind at 16.8%. Information technology was also a significant chunk at 16.4%. This tells us where the fund managers saw the most opportunity or where the most companies in the small cap space are located. Now, for some key facts about the fund itself. As of the 31st of October 2025, the fund size was a massive $29 billion, $29,025,655,588 to be exact. That is a lot of money, and it held almost 2,000 different investments. The portfolio turnover, which is basically how often they buy and sell stocks, was 25%. This means they are not aggressively trading and are likely holding onto things for a while, which is common for index funds. Let's talk about costs. For every $10,000 invested in this fund, the costs over the last 6 months were just $1. That is a tiny fraction of a percent, 0.02%. This is incredibly low and a big plus for index funds, as low costs mean more of your money stays invested and working for you. Next up is the Fidelity Series Large Cap Growth Index Fund. This fund is different because it focuses on larger companies that are expected to grow faster. The fund size here is $2.2 billion, $2,228,441,587. That is smaller than the small cap fund, but still substantial. It holds 396 different investments. The portfolio turnover is a bit higher at 39%, suggesting a slightly more active approach to tracking growth companies. And the cost for this fund, for a hypothetical $10,000 investment, the costs were actually $0, basically zero. That is represented as less than half a dollar and less than 0.005%. This is phenomenal and likely due to fee waivers or some special arrangement contributing to zero net cost for this period. What did this large cap growth fund invest in? Information technology dominates here, taking up a massive 53.6% of the fund's net assets. Consumer discretionary follows at 12.9%, then communication services at 11.2%. This concentration in tech is typical for growth funds, as these companies often drive significant expansion. The top holdings give us a clear picture of its focus. Nvidia Corporation is number one at 13.8%. Apple Incorporated is next at 11.5%, followed by Microsoft Corporation at 11.2%. These are giants in the tech world, and owning them heavily is the strategy for a large cap growth fund. Then we see Broadcom Incorporated at 5%, Amazon.com Incorporated at 4.5%, and Tesla Incorporated at 3.9%. The top 10 holdings alone make up over 60% of the fund. This is typical for growth index funds and shows a strong conviction in these specific companies. Moving on to the Fidelity Mid Cap Index Fund. This fund targets medium-sized companies. The fund size is a significant $45 billion, $450,438,047.9. It holds 816 different investments. Portfolio turnover is at 20%, indicating a relatively stable portfolio. Costs here are again very low. For a $10,000 investment, the costs were just $1, that is 0.02%. Very competitive pricing, which is what you expect from index funds. This mid-cap fund has a more balanced sector allocation than the large cap growth fund. Industrials lead at 18.6%. Financials are at 15.1% and information technology at 12.5%. We also see significant allocations to consumer discretionary at 11.4% and healthcare at 9.8%. This blend shows a strategy that is not overly concentrated in just one or two sectors. Looking at the top holdings here, we see Robinhood Markets Incorporated Class A at 0.9%. Howmet Aerospace Incorporated follows at 0.8%. Then Royal Caribbean Cruises Limited at 0.7%. This fund indeed holds a more diverse set of companies than the large cap growth fund, reflecting the mid-cap focus. Now let's look at the Fidelity Large Cap Value Index Fund. This fund invests in large companies that are considered undervalued or trading at a lower price relative to their fundamentals. The fund size is $12.2 billion, $1,223,024,828.4. It holds 871 investments. Portfolio turnover is 28%. The costs here are also very reasonable. For a $10,000 investment, the costs were $2, that is 0.03%. Value funds often have slightly higher costs than pure index funds, but this is still quite low. The sector breakdown for this value fund is significantly different from the growth fund. Financials are the largest component at 21.8%. Industrials are next at 13.3% and healthcare is at 11.9%. Information technology is lower here at 11.3% compared to the growth fund. This shows a clear tilt towards sectors that are often valued more for their stability and dividends than for rapid growth. The top holdings really highlight the value strategy. Berkshire Hathaway Incorporated Class B is at 3.1%. JP Morgan Chase Civiamp Co. is also at 3.1%. Then we see Amazon.com Incorporated at 2.3%. While Amazon is a growth company, it is often present in value funds too due to its market dominance and underlying value propositions. Alphabet Incorporated Class A is at 2.1%, ExxonMobil Corporation is at 1.8%, and Johnson Johnson is at 1.7%. This mix of established companies with strong fundamentals and significant dividends is characteristic of value investing. These top holdings alone account for almost 20% of the fund. Looking at these funds broadly, we see Fidelity offering a diverse range of index funds covering different market capitalizations and investment styles. The extremely low costs across most of these funds are a major advantage for investors, letting more of your returns stay in your pocket. The sector allocations and top holdings clearly illustrate the intended strategy for each fund, whether it is small cap growth, large cap growth value, or mid cap. Importantly, the presence of funds with zero cost for the reporting period highlights Fidelity's competitive efforts to attract and retain assets. The sheer scale of funds like the Small Cap Index Fund at almost $29 billion shows significant investor trust. This scale also often leads to better tracking of the underlying index and potentially lower transaction costs, which all benefit the investor. From a Warren Buffett perspective, lower costs and clear investment strategies are key ingredients for long-term success. Now let's quickly glance at some of the other funds included here. We have the Fidelity Large Cap Growth Index Fund, which is quite similar to the Series Large Cap Growth Fund, with Nvidia, Apple, and Microsoft dominating its top holdings. Then there are the Fidelity Flex funds, including the Flex Small Cap Index Fund and the Flex Mid Cap Index Fund. These flex funds generally have similar sector allocations and investment strategies to their non-flex counterparts, but are often available through specific intermediary platforms or managed accounts. For instance, the Fidelity Flex Small Cap Index Fund has a fund size of $345 million. The costs are again incredibly low at $0 or essentially zero. The Fidelity Flex Mid Cap Index Fund, on the other hand, shows a high portfolio turnover of 135%, which is unusual for an index fund and might warrant a closer look in a more detailed analysis. Moving into the financial statements for the Fidelity Series Large Cap Growth Index Fund, things get more detailed. This is where we see the nuts and bolts of the fund's performance and holdings. Looking at the schedule of investments, we see a very detailed breakdown of what the fund actually owns. As of the 31st of October 2025, Common Street OX made up 99.7% of the fund's net assets. This shows a heavy commitment to the stock market. Breaking it down geographically, the United States accounts for a dominant 99.2% of the holdings. Other countries like Brazil, Canada, and South Korea have much smaller allocations, reflecting the fund's focus on the US market. The statement of assets and liabilities gives us a snapshot of the fund's financial position. Total investment in securities valued at cost was over $1.1 billion, 1129. $0.5456 That is after accounting for some liabilities. Total assets are just over $2.2 billion, 227. $0.122688. The statement of operations shows how the fund made and spent money over the 6 months ending the 31st of October 2025. Total income was around $5.8 million, $5,840,300. Expenses were much lower at just over $18,000, $18,431. This results in a net investment income of just under $5.8 million, $5,821,800. The big story though is in the realized and unrealized gains. Net realized gain was almost $20 million, $19,926,584. And the change in net unrealized appreciation was a staggering $536 million, $53699. $0.0595, this massive unrealized gain indicates that the fund's investments have increased significantly in value during the period. The financial highlights further break down the performance per S-Hair. The net asset value at the end of the period was $30.82. That reflects a substantial gain from the beginning of the period when it was $23.28. The total return for this 6-month period was an impressive 32.57%. This strong performance is a testament to the growth-oriented investments held within the fund. Now, let's decode all that legal jargon about the approval of advisory contracts. Essentially, the board of trustees who oversee the fund met to decide whether to keep Fidelity Management and Research Company and Geode Capital Management as the investment advisors. They reviewed a lot of information about the quality of services provided, investment performance, cost profitability, and economies of scale. Notably for the Fidelity Series Large Cap Growth Index Fund, the board considered that the fund does not pay FMR a direct management fee, but FMR is compensated through fees from other Fidelity products that invest in this fund. They also noted that FMR or an affiliate covers most operating expenses for the fund. This structure is a bit complex but aims to align incentives. The contract was renewed through September 2026. Overall, these Fidelity funds show a consistent strategy of providing low-cost index investing options. The financial data highlights the growth potential of the underlying markets and the efficiency of index fund management. The detailed breakdown of investments and financial statements provides a clear picture of the fund's operations and performance. So what is the story here? These reports show Fidelity providing a robust and cost-effective suite of index funds that cater to different investment needs from small to large cap and growth to value. The extremely low costs are a major win for investors, meaning your money works harder. The strong performance of the growth funds especially is notable in this period. However, it is also important to note the concentration in top holdings for some funds, which indicates higher sensitivity to the performance of those specific companies. The future direction looks stable with renewed contracts and a continued focus on passive investing, but investors should always be mindful of the inherent market risks. Alright, that is our deep dive into these Fidelity Fund reports. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And hey, don't forget to check out our Discord community. The link is in the description below. Thanks for watching. See you next time.